Ooh, we're down here again at the ledge again. Ooh, 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 ooh. I'm gonna put a couple of buys down here and see if where's this projecting to, like 79, just like down here. Let's see if we can't catch a hard ledge break through where it got bought here. And here it comes. But you know what we're gonna do? I think I might take, let's take one right when the ledge breaks. It may not break. So you know what? I'll take one here because this is where it got bought before. It's going to go down, but this way we're already in the trade. And now we'll try to add to it. And the bottom could fall out. It's just, there it goes. All right, let's protect that one
Or
lot.
not.
Yeah, that's why I always take one at the market. Exactly, that is exactly why. Because look at this. This is a $30 on a one lot micro, and it never took out the ledge. It got really close. It got within a tick of the ledge, and then it just ripped up. And you just saw
one of the 1% where the ledge didn't break.
Exactly. And you just saw a really good example of why you always get one on when you're swarming, because look at this. We might end up with $100 out of this one micro, which would be pretty funny. It's at like $40 right here, and we got filled. Okay, so cool. That was fun. I'm going to cancel those other orders at the bottom, and I think that should have taken us to start. It did. Cool. All right. What a great way to open a class, with a demonstration of my crystal ball at the low. Oh, not a crystal ball, just a technique that's very statistically accurate, let's just say. All right, welcome everybody. This class is about drills, and it's going to be one in a series. We're going to do them periodically. You'll see them on the schedule. It's not going to be like on a certain day or anything like that. It's just a really good topic. A number of you have asked about it, and I wanted you to have an opportunity to see and hear my thoughts on various drills and how I do them. And again, I really want to make this point. There's a lot of places you can, if you just Google, futures trading drills. There's a couple of sites. Jigsaw has some good ones on his blog. There's some good ones on that audio guy. What is that called again?
Tick Strike, or the other one?
No, the other one. It's the one. It's the one that is connected to Jigsaw, or was on his
right.
Price Squawk. Price
Squawk. That's it. Yep.
Yeah. Price Squawk. I'm keep hearing music. Who is that? Is that you, JVC?
Oh, you're not supposed to be able to hear that. My apologies. There we go.
Yeah.
Sorry.
Anyway, not a problem. We might get another bite at that trade. If we do, I'm going to interrupt class for a minute and go ahead and take the trade, because why not, right? I'm just scalping the fade of the ledge break if it breaks, and if not, nibbling in early. But I may not always do it. But when I like the setup, I'll do it anyway. Price Squawk. So if you Google trading drills, you'll find a whole lot of takes on it. And so the first point I want to make, and we're down here again, so let's play while we're down here. Let's go ahead and get one on as the ledge broke and see if we can get a little more. Throw a target up this time, because I don't want to keep doing this. I do want to teach the class. It's just such a good spot. It's kind of hard not to. We're trading right around 0.0 here, right around 600, and it's just too easy to grab profits here. Boom, boom, boom. Here's another one. All right, I'll stop doing that. Anyway, it's like printing money. It's like having an ATM. I kid you not. Anyway, these are going to be my interpretations of the drills and how I trade them, and why I use any particular drill. And so the point of doing a drill, this is the key thing to understand here. The point of doing a drill at any point is to learn something. You're practicing a skill. It's just like, I remember when I was a sprinter, I used to practice getting out of the blocks, the starting blocks, because that was the most important thing I could do in a sprint race. If you screw up the start, it's really hard in a 100-meter dash to win it, so you practice starts. And, that's what this is about. Drills are practice. And so, for example, if we could create a drill for swarming, low end ledge breaks, wait for absorption and then get long. And, you would have been long right here. Anyway, so I want to talk about one drill in particular today, it's kind of a family of drills. There's a couple of different ways to do this, but one of the questions many of you have had, and makes sense. The hardest thing about doing what you just saw me do a couple of times there is understanding where to do it and where not to do it, right? I mean, common sense. Okay, that's practice. Practice tells you when something that looks similar to the layperson is not the same thing. And think about any other example of that. You know, a Formula One racer, a pro surfer, you know, a professional baseball player. You know, why let a certain pitch go, but hit a certain pitch? What's the difference? To the naked eye, there's no difference. You know, we can't see the difference they're seeing. That's the blank. That's the 1% that makes that person a 1%er. Okay. So doing trading drills is about, you know, getting better at this craft. This is a learned skill. This is not about having magic indicators. It's about getting really good at something. And the way you get really good at something is by practicing it. The more you practice it, the better you get at it. And so how can you practice this thing that you just saw me do, you know, 3-4 times in a row, which is swarm scalping ledge breaks? Okay, there's a couple of ways I like to do this, and different people call this drill different things. So bear with me on that point. This is either the always in or cut and reverse drill, depending on who you talk to and depending on what the rules are for the drill. So let's just go through it, and we'll call it the, you know, always in, comma, cut and reverse for purposes of the library, JVC. And again, it's always going to be, you know, Jeff's interpretation of the drill for what Jeff's trying to learn. Okay, so what am I trying to do when I do this particular drill? Maybe, let's see, AICR. We could call it the AICR. Maybe come up with some cool acronym or something. Anyway, what am I trying to do? Well, the trick to swarming well is to understand the nature of current trading. What's happening RFN, right fracking now. I'm rewatching Battlestar Galactica, so it's really funny that we use fracking instead of the other F word. And again, I want to just real quickly call your attention to, if you go to TRG process, there is a document, Elements of Doc's Discretionary Scalping Decisions, and on that document, direction is number 2. Time of day, that's the first thing, because different time of days are like different markets, different times of the day. But direction is the next thing. You know, you have to understand the direction. So if I'm trying to understand direction, well, right now we're going down. Why do I keep buying the market? Why is Jeff scalping long? We keep going down. Well, because we're at an extreme. We keep testing SD2, and it keeps, once it blows through a low, it becomes a really good spot to fade that energy. And again, I'm not here to tell you why that's a good setup. I'm here to tell you how to practice doing that well. Okay? Did I hear a question coming from somebody? No. Okay. So what is the purpose of this drill? The purpose of it is for some period of time. So that's the first thing I do. I set up a period of time. Like for the next hour, I'm going to do the drill, or for the next 5 minutes, I'm going to do the drill. I do it all different ways. For the next 30 seconds, I'm going to do the drill. A good interval have something to do with what your process is. And since I look at 30 minutes of LRC here, and I look at 30-minute bars on structure, a 30-minute always in cut and reverse is a really good interval. So that's a good one. And so, pick a period of time. Okay, number 1. The next 2 things, the next 2 considerations for this, and, always start doing drills in sim until you figure out what you're doing. You don't want to be trying to figure a drill out with real money and then, blow a lot of money trying to learn a drill. But once you have, you understand a drill and what you're trying to do and the drill objective and, when you're right and wrong, doing them with real money is the right way to do it. It teaches you much faster. But you may not have a real money account or whatever. So it's fine to do them in sim. So here we're looking at 2 considerations. We're looking at the net P&L over the interval of time. So remember I said pick a period of time. 5 minutes, an hour, half an hour is really good because it coincides with structure in market profile, whatever you want. 5 minute, a lot of people trade a 5-minute chart. I like to do it sometimes really fast. Like I'll just, reset the dome and I'll say, okay, always in for the next 2 minutes. It forces me to pick what I think is happening and either stick with it or get out of the way really quickly. So that's number 1. And then the other consideration that I track when I'm doing this drill is I track my drawdown. So I don't care about MFE. I don't care about MAE. The purpose of this drill, however, is to get better at having a low MAE. That's what I'm trying to learn here. I'm trying to learn to see inflection points. And when I'm wrong, get out of the way carefully by scaling out, or get out of the way immediately by reversing. So those are the two choices I have. So that's the first thing to understand, that when you start the drill, in my version of doing it, I pick, okay, for 5 minutes, I'm going to do the drill, and I'm going to always be in the market with at least 1 micro. That's the rule. I can trade up to, and pick a number for yourself, whatever, up to 20 micros. If you want to practice scaling, 30 micros, whatever, pick a number. And so the rule is, for that period of time, you have to be long or short, but you can be as scaled in or out as you want. So the trick is to try to get the direction right. If there isn't a direction, if there's a range, understand that you're fading the range, one end or the other, and look for the places where it makes sense to turn, to cut and reverse. Because remember, you've always got to be in. So that's why both of those names make sense. You always have to be in the market with at least 1 micro. And the way you get out is you cut and reverse. So if I'm short 1, I don't go flat. I have to go to +1, or I have to scale. See what I'm saying? So I always have to be one way or the other, and for whatever the amount of time is I'm going to do the drill. And then when I'm done at the end of the drill, what I do, and again, this is my interpretation of this drill, but this really works well for me for practicing scalping. I look at just 2 things for that period of time. What's my net P&L? How much money did I make or lose? And what was the drawdown? So if I made money, how much did it go against me during that? And if I lost money, what was the worst case? Did I improve my way out, or did I just keep making it worse and worse? And what I'm trying to learn from doing this is to read in the right fracking now what's going on and how I can make money with that. And one of the keys to getting this drill right is to learn to scale. And that's one of the reasons I like it so much. If you don't feel like you have a good read, just leave a 1 lot on, one way or the other. And you could use the slope of the 300 as your one way or the other. If it's sloping down, stay short. If it's sloping up, stay long. I mean, just pick something. If we're north of the VWAP, be long. If we're south of the, whatever you want, pick one, get in, and then now you have to manage it. And so, if you're really right, scale in with yourself and go with it, and if you're wrong, is it possible to scale your way out of being wrong and get going the other way? And so that's what you're doing. And so there's nobody looking over your shoulder. It's not real money, certainly when you start. So it just is a way to practice your ability to read the market right now. And that's a really powerful thing. If you've watched any of my live sessions, and I know all of you have watched some of them, you know that my edge is my ability to read what's happening right now. That's what I do really well. And then my second best thing is I manage risk around ideas about what's happening right now. Whereas Lee, his approach is much more, the odds are this is going to happen, so I'm trading that way toward those odds. And I'm more like, okay, is this a situation I can make money in right now? And so the secondary objective, the first objective is to learn how to read what's going on right now. And the secondary objective is to teach yourself how and where to be wrong. And I know a number of you have thought about this. Is Sebastian here? He'll see the recording. Sebastian posted that, it's hard to learn when you're swarming where, scaling into this is just not going to help me out. I'm just plain wrong and I need to get flat and start over. And there are places that happens. And the sooner you come to that conclusion, the less money you'll lose. What you don't want to do is you don't want to come to that conclusion when it's just a matter of you were a little early. For example, look at the last fade I did down at the low a few minutes ago. I went in with a market order first because I said, what if the ledge doesn't go? I want to be long down here. And lo and behold, the ledge did not go. And it immediately became profitable. So that's a really good example of that. Okay, let me look at the questions and comments and see where we're going and if we're all on track and what I need to clarify. Okay, so I know that some are fearful of entering instead of reacting to the software to understand probability. Yep, that is a good point. Yeah, people would rather a piece of software does it. And the other thing that's interesting about the software related, buying indicators is, people can blame the software. Like, I spent $5,000 on this and, Mr. Developer, it doesn't give me good signals. It's not worth $5,000. That's classic retail thinking. Whereas, this is, hey, look, we play a game of odds and statistics. And, profits are the result of executing well when the odds are in your favor. Yeah, nobody will disagree with that statement who's a professional trader or a full-time trader. I mentioned this in all the boot camps. I haven't mentioned it recently, just in regular TRG sessions. One of the times that I used to go up to the CME in Chicago and just hang out, I had friends in the pit and I'd hang out as a guest and, go out with these guys after the pit closed in the bars and just listen to them. And one time I remember there was a journalist in the bar, and now this isn't the coffee story. This is a different story. There was a journalist in the bar, and he just started asking, some fairly well-known, guys you would see on CNBC's Badges traders, as they were getting their drinks and whatnot, if you had to name one thing that is important to your trading, what would it be? And over again, and without letting the other ones hear the answers, and the answer was always process. Your process. It was always your process. And this is a drill to practice your process. It's that simple. It really is. And if you have a process that works over and over again, like mine does, particularly for this swarming stuff, it's uncanny how well this works. If you played with it at all or looked at my P&Ls I posted, I almost feel like I'm stealing here. And I also feel like, at some point it's going to stop working. And occasionally that happens. But you know what? This model is statistically pretty clear. And the conditions it takes advantage of aren't likely to change that soon. So this could be, I've run into this a couple of times in my trading career where, I stumbled on something and it helped me for the next 30 years. This could be one of those. There's a few of those I've had. So anyway, you never know. But that's a good drill. That's how you do it. And let's see. Okay, I hit all the key points. So now let me look at the questions and see what continue with that. Let's see. We did that. Yes, exactly. I agree with everything you guys are posting. No, this is absolutely not a structural drill. I will talk about some drills you can do around structure, because when I first started learning drills or structure from Lee, I did design some drills for myself with respect to structure. I wouldn't necessarily be going short at the top of this range right now, because we're in, a wide horizontal range, but we're going up really, really strongly, and it's Friday. By the way, make sure you join me for the Friday closing session. Today, it's going to be crazy. I just have a feeling. I just have a gut feeling it's going to be a good one. And today's been good across the board, but I think the close could be particularly good. So anyway, all right. So I don't see any other questions. So yes, there are drills that are really helpful for structural trading. This class isn't going to be about those, but I am going to do some classes on those, and maybe we'll get a special guest, and Lee can tell us a little bit about some of his drills. But just as an example, a structural drill that I did when I first, I understood market profile and footprints before I met Lee, but Lee's take on it was, made sense to me. The statistical way he approached, B to A and, that kind of stuff. And when I was first practicing the B to A, I just forced myself, and I think Felipe did something similar. I just forced myself on my whiteboard to just put, which direction we were going, what my bias was, and I forced myself in one of my sim accounts to take the trade every day and just go with whatever those odds said, to prove to myself that over, 100 days or whatever, the odds would more or less play out, and they completely did. But the risk management really scared me. That was my biggest problem with structure, is I couldn't figure out how to, where do you enter from? As a scalper, getting a good entry is very important. Whereas as a structural trader, it's where you're going. The entry doesn't have to be perfect. You can come in late. Whereas as a scalper, going in late is okay, but you can actually be early, and that's better as long as you get it right. So it's a slight difference, just in the style of trading you're doing. So anyway, that is the basics of cut and reverse, or always in. Are there any other questions about that or comments about that particular drill, the one for today? If not, I can show you some examples of it. We're setting up a good situation for that right now. Entry. Okay, I'm just reading your comment. Yep, that's fun. Here, you know what I'm going to do? I'm going to switch this real quickly to just a sim account, just so I don't ruin the statistics of my my funded accounts or of my evaluations or my cash accounts for that matter. And what we'll do is we'll reset this and let's start that drill right now. We're at the top of the range, so let's go all in, always in drill, and let's assume it's a short trade. So I'm now short. I just hit the market at 77 and a half. I'm going to take another one here. And let's assume we're playing with a 20 lot and we're going to do it for 5 minutes. So we're going till 9:25. I'm going to trade. And I can cut and reverse if I want. I can do whatever I want here. The max I can do is have a 20 lot long or short. Those are the rules. And we'll stop in 5 minutes. Those are the only rules. So, I can put targets up. I can put limits up. I can do whatever I want. So I can say, all right, if we push the other end of this range a little higher, that's what? Right about 0, so right about here. Might not get there in 5 minutes, but if we get up there, that'll be a good spot to fade. Maybe here and here as well. Meanwhile, I've got two. Let's take one off immediately on this push down, protect the other one right away. Oh, we nailed that one. Wow, we'll just protect both of these, but we'll separate them a bit. So boom, we got hit with one, we'll tighten up the other one. And if this gets filled, I need to immediately make a decision. I don't have to do it in a second, but I can pause and say, okay, what do I want to do now? But then I have to go back in either long and short. That's the rules. It's really simple. So I'm going to protect this a little better. And remember what you're doing. You're comparing how much drawdown did you have in the 5 minutes versus how much money did you make? And so far, I haven't had any drawdown, really. It's been minuscule. So a couple of ticks, so we can assume that to be 0. And we're about to take the profits on this trade. Okay, so let's not do 5 minutes. Let's just stop there for a second. Let's say that was the drill. We were doing it for whatever that was, 2 minutes. That would be a good example of how to do an always in / cut and reverse. I put it on, I added to it, I started scaling out, could have stayed in it. If I'd done that, you can see it would have continued. So now what I need to do, I can say, all right, I'm done, or I can say, all right, you're still doing the drill. Got to go in again, pick a direction. It's up to you. This one's tricky. We're going down. We're right in the middle. This is really tricky. Oh, let's share some risk management and go ahead and buy this. So, it's going down. So buying it is a little bit risky, but so far so good. I'm going to take profits pretty fast on the first one, just so if I'm really wrong, I don't get clobbered. But right now I'm playing long, so I can either keep scaling up to whatever the number was, 20 or 30 contracts, or I can get out of it if I want, or I could just take one off if I want. I can do any of those things. So the objective is to see how much P&L you can end up with how much drawdown, comparing the two. Now I'm getting a little bit of drawdown here. Still haven't exceeded the profit that I have, so I'm still okay. Got a 2 lot. It's probably a good idea to make a decision here. And this is what it's teaching you to do. I either need to add to this or I need to get out of this. That's what I need to decide right now. And just for, I'm not saying I'm great at this. I'll buy one more and we'll go ahead and try to get out of the first two really fast. There we go. Okay, come on. All right, so now I can protect that the other way. And so that one worked. Now I got to make another decision. How do I want to play? So that's how I do this drill. And you can see it really keeps you focused on what's going on now and where you are in the range. Like that last example, I was like, I really don't want to be long into this energy down, but it is closer to the bottom. So you have to make a decision. It forces you to make quick decisions. And, we didn't, in the examples I showed you, have the following happen. But if it starts really going against you, you have to have already decided, all right, at what point am I going to get flat and reverse? You're allowed to do that. Or scale down if you have more than one contract. So you're constantly in this, am I right / risk management mode. And I just think this is the best drill, particularly for swarming. And I've had a couple of students use this in swarming and have really good benefits. Video game guy, not the least of which, this is one of the drills he does. another student that's a TRG student that's no longer in TRG right now. I worked with them one-on-one, just, over Messenger sorry, I just bumped into my desk. Hope my computer's okay. Yeah. I worked with them just over Messenger for a couple of months on a very casual basis, and they found that to really be effective for them as well. So anyway, we have about 5 minutes left, so this will be the perfect, again, these are going to just be short, half hour. Here's the drill I do. Here's the way I do it. Here's what I'm trying to practice and learn from it. Here's why it works for me. That's what I'm going to show you, and then hopefully show you a couple of examples like I just did, and then that's it. That's going to be this class. I think this will be a really good type of class to do, a couple times a month for everybody with a different drill each session. That's the idea. So I'd love some feedback. And if you have any questions or comments, what do you think of the format? What do you think of the idea of a drills class? What do you think about this drill? Feedback on anything.
Incidentally, Jeff, I was poking around the library, kind of trying to play with the idea of where to put this. And it occurred to me that to me, I see this as perfectly related to the business of trading. This is trader development.
Yeah.
So I think we should just have a trader development section in the business of trading.
Okay. Yeah. And then have in there, could you have a section called drills and maybe other sections there? Yeah. All right. Do that. Perfect.
Yeah. Because then over time, as we add other trader development oriented stuff, it can all,
they may not be drills. So, exactly.
Yeah, exactly.
There are trader development things like learning when to scale, or, what types of brokerages to use. Yeah. Yep. Cool. Thank you, Fitzroy. That's really, really good feedback. I appreciate that. Also to you, Jeffrey. Removing the momentum tails and focusing on the absorption. Yeah, that was a big one for me too. And it's turned into an ATM. I love that. I'm so happy for you. But I got to tell you, Jeffrey, you should be proud of yourself. Several of you here should, because you're not there by accident. You're there because you've shown up for classes and you've worked your rear end off and you practiced and you listened and you've watched a lot of videos. I mean, look at Maria Trevino posting in the pit. She's withdrawing money. That is so cool when you start doing that. You're just like like you said, the market's your ATM. And when you get there, it's so powerful. I mean, this is like, I could do this for a living. I can go, live in, Mykonos, on an island and do this. And that's such a great feeling. You know that the 9 to 5 no longer owns you, whatever your gig is, and for a guy like Surfer Dude who has, other streams of income, or video game guy, it's just another really good stream of income, and it's fun to do. And, so why not? I love it. Okay, I'm going to cancel that order up there so we don't get filled. As a scalper, always in drills help you greatly. Awesome, David. I love that feedback. Thank you. So let's see, where are we at? And for me too, I totally agree with you. I mean, when I'm not scalping well, I do this drill. And because it forces me, to pick a direction and either commit to it or not, or as you guys like to hear me say in live sessions, or, if it's kind of okay, it's a decent idea, then I'll nibble into it. And I like to do this drill with, I think 30 micros is a really good block, because, that's a workable amount with, a 25 or a $50,000 quote unquote funded account. And it's a really good, take that. So, that's the last thing I want to mention. I'm glad I reminded myself. I'm sorry, I'm a little distracted here, but I wanted to make sure I didn't forget this last point. So remember, I said you're comparing your drawdown to your net P&L. And the way I like to do that is I like to use, at least real life evaluator scenarios. So, take a 25K, what's the drawdown there? 1,500 trailing drawdown, and how many micros can you trade in those? Usually 30, so take 30 micros and, see if you can see how much money you can trade for an hour making, how much, try again, Jeff. See how much money you can make trading for an hour with a $1,500 trailing drawdown. Give yourself that as a parameter. and a really fun thing to do, and I do this all the time when the evaluators have one of their sales, 80% off, 90, and you can buy, 50K or 25K evaluations for $18 or 20, buy 10 of them or 5 of them or whatever, and just do drills. And I've gotten a bunch of funded accounts that way. Sometimes I just, get them to funding level, and then I don't need another funded account, so I just let it go. But it's a really good way to practice and to build your confidence. It really will help do that. So good feedback. Thank you, everybody. Are there any other comments or anything? Again,
a thought I had actually about the costs, because you were talking about, like, ideally the ultimate way to do these drills, of course, is in a live account, with real money. Of course, not everybody can do that and so forth. But I was sort of thinking about that and thought, because obviously the first reaction is like, oh God, I don't want to actually spend money on this. I want to do it in a sim or whatever, which I think for anybody who's newer is wise anyway. Yes. But I just got to thinking it, like, if you were going to go practice, your baseball swing or your golf swing or anything, you go to the batting cages, what's that going to cost you? You go to the driving range, what's that going to cost you? You go do 9 holes, what's that going to cost you? You are used to working on hobbies and other interests and pursuits, and understanding that to get better at it, I'm going to spend X amount. So really, why should this be any different? So, if you've got the account and the ability to do it, maybe it makes sense to go in and say, well, I would go spend $50 at the batting cages. So I'll put $50, worth of drawdown for myself and micros into doing some drills right now. Yep. Whatever.
Yep. That's an excellent tip. And that's how I do it with my cash accounts. I give myself a budget of real money. And then I go play, and what's the worst thing that can happen? I get better. A couple of really good comments and questions. Maria, do you create any space or time separation between drills and real trading? I do.
Interesting question.
It's a great question. I do, but I also have learned over time. I used to separate them very, very mechanically, so that I didn't take bad habits to real money or make any mistakes with real money. Now I've gotten in the habit of only practicing things that I would do in real money anyway. So sometimes when I'm practicing and I'm not in real money, I get mad at myself because, God, I just made, $25,000. I could have made that in real money. So I tend to always practice now, unless I'm trying something new or testing. I tend to use one of my small accounts, and just the worst thing that could happen, I blow up $500 or $1,000, and that's part of our business. It has to be monopoly money for you. But then again, if you're new, you don't want to keep doing that. That'll crush your confidence. So a great question. And that's how I do it. JVC, what do you think of that? How would you answer that?
I think a lot of it's going to depend a bit on where you are, in your process development and all of that as well. But it's a good point that I think for a lot of people, again, especially if you're a little newer, you're still figuring out your path and so forth, it could be really dangerous to not give yourself a good chunk of separation between having done drills and real trading, because you could just be in that always in mindset, or the sim environment mindset of, I've got infinite drawdown, I don't need to worry about anything. And if you don't scrub your head of that before you sit down to get serious.
Really fast. That has happened to me before. That happened to me once right before I left Colorado. I was in the process of moving. I was trading. I had been testing something in a sim fairly aggressively, and I saw the setup on my computer. My girlfriend was crying because I was leaving and distracted me, and I went to my computer. I was like, oh, that's such a good setup, and I put a trade on. And I was thinking I was in the sim environment. I realized right away that I wasn't. I thought, oh, it's not that big a deal, but I wasn't totally focused on the trade. I turned around to answer some question a mover guy asked me, and to tell my girlfriend, all right, I'll shut my trading computer off and we'll go to lunch and we can cry some more. And then I turned back around. I was down $15,000. That's how fast the market had just suddenly moved. I wasn't aware of what was going on. What I thought was a good setup wasn't. And that was not with a large position. That was in the ES, and it was only a few contracts. So, that stuff can happen really quickly, particularly when you're not paying attention or in volatile conditions like we have right now. So you always want to be really focused on that. And the cost of tuition, Robert, that's a really good way to look at it. And I completely agree with that. So, hopefully we answered your question, Maria. That is such a good question. And definitely everybody should consider that question slightly differently, depending on where you are on the path. That is so true. And like I said, I used to just, never mix the two. And for a long time, that was the way I was, because it was clear one is testing and practice, sometimes even playing, and the other is real money, But then as I got to be a bigger trader and a more, and a full-time trader, more time, I realized that, it was better for me to always, it's always real. I treat evaluations as real money. It's really hard for me to just do a monkey trade. So every now and then I'll play around in a sim, but it just, I've trained myself to just be adverse to losing. And that's a good thing to train yourself to. So, all right. I think this was fun. We are doing it again. It's on the calendar. You'll see more of these coming up throughout the month. And by all means, if you have any suggestions about them, if there's any drills you want me to do, again, next time we'll do some different drills, and each time with a different objective. This one specifically is really good for practicing swarming, which, as we've demonstrated, is a powerful technique, regardless of what style of trading you're doing. All right. Thank you, Robert. Thank you, Maria. Thank you, JVC. We'll see everybody at the close. Today's close could be crazy. I mean, with NFP this morning and all this volatility, we now had a double break day. So, anything could happen. We could double break. We could break the high again. Anything could happen. So join us for that. We'll see you there.